Okay, imagine this for a second. A huge stack of cash, right? Like brand new notes.
Uh-huh.
Picture that stack going way, way up so high it's, I don't know, hitting the moon almost.
Okay, yeah, big stack.
That's kind of like the amount of money, 78,166 crore, that just sort of vanished from the market value of six top Indian companies. Just six in 1 week.
Wow. That's a serious number. 78,000 core. It really makes you stop and think.
It does. It's more than just a number on a screen, isn't it? It feels like a real shift.
It's a very visible one, definitely. I
Yeah.
mean, these aren't small companies. They're huge players, woven right into India's economy.
Yeah.
So when their value drops like that, it gets noticed.
Right. And that's exactly what we want to get into today. We're going to try and figure out what happened.
Get behind the headlines.
Exactly. We'll look at the why behind this market wobble, see which big companies got hit hardest, and crucially, what it all means for the bigger picture. For you listening, we want to give you the essentials without you needing, like, a finance PhD.
Yeah, makes sense of the noise.
Yeah.
We've been looking at the analyses, focusing on how these top firms performed.
Think of us as maybe market detectives for the day, piecing it together.
Ah, okay. And these clues, these market moves, they often tell a story about what investors are thinking, what they expect, and that can eventually ripple out, affect things we all feel.
Okay, so let's start broad. The market overall. What was the general mood last week?
Well, the BSE Sensex, that's one of the main trackers, like a market pulse.
Right.
It dipped down about 609 points, which is roughly 0.74%.
And the Nifty, the other big one.
Similar story. It fell about 166 points, so 0.66% down.
Now, those percentages, 0.74, 0.66, they don't sound massive on their own.
No, but you have to remember the scale we're talking about. That's the value of huge parts of the Indian stock market. So even a fraction of a percent shift means, well, billions in perceived value changing hands, or rather, changing perception.
Like a small tremor shaking a really, really big building.
That's a good analogy, yeah. A dip like that suggests investors, overall, were feeling maybe a bit less confident, a bit more cautious about the immediate future. Could be lots of reasons why.
And some of the absolute biggest names definitely felt that tremor. Reliance Industries was top of the list, right, in terms of loss?
Yes, by quite a margin. They saw their market valuation fall by a massive 40,800 crore.
40,000 crore. Just wow. That brought their total value down to, what, still enormous, but down to 19,030,339 crore.
Still number one, but yeah, a significant hit.
And they're into everything, telecom, retail, energy. So why such a big drop for them? Was it one thing or?
With a conglomerate like Reliance, it's often a mix. Their energy side means global oil prices are always a factor. If oil markets get shaky, investors get nervous about Reliance.
Okay, that makes sense.
Plus, after markets have gone up for a while, you often see big investors decide to, cash in some chips, sell some shares, take some profit.
Right, lock in the gains.
Exactly. And when they sell a big stock like Reliance, it can really move the needle because it's so widely held. It has a ripple effect.
Okay, so profit taking, maybe some oil price jitters. But Reliance wasn't the only one feeling the heat.
No, not at all.
Tata Consultancy Services, TCS, big IT player, they also dropped significantly.
They did, down about 17,710 crore. Their valuation ended the week at 12,071,395 crore.
Which is interesting because you often think of Indian IT as being pretty resilient.
It is in many ways, but it's also very connected to the global economy. A huge chunk of their business comes from overseas clients, like in the US and Europe.
Ah, right.
So if there are whispers of a slowdown in those big markets or companies there cutting back on tech spending, investors here might get worried about future contracts for firms like TCS.
So it's like they're reacting to potential future problems.
Sort of, yeah. Adjusting valuations based on those global economic signals. It's forward-looking.
And it wasn't just TCS in the tech space, was it? Infosys, too.
Infosys also saw a decline. Their market cap went down by over 10,400 crore, landing around 6,049,876 crore.
So definitely a bit of caution around the big IT names last week.
It seems that way. Again, that global connection is key. Worries about international clients tightening their belts can make investors nervous about the whole Indian IT export sector.
What surprised me a bit was Hindustan Unilever, soap, shampoo, everyday stuff.
Right, consumer goods.
They also saw their valuation drop by about 5,462 crore down to 5,053,974 crore. You'd think they'd be safer for market swings.
Usually, yes, consumer staples are considered more defensive. But a dip there might signal broader worries. Perhaps investors are thinking, If the economy looks iffy overall, maybe even spending on essentials could slow down a bit. Or maybe profit growth won't be as strong as hoped.
So even the safe sectors weren't totally immune.
It suggests the caution was quite widespread.
And the banks, ICICI Bank and State Bank of India.
They saw dips too, but smaller ones compared to Reliance or TCS. ICICI was down about 2,454 crore, SBI roughly euro 250 crore.
So still losses, but not on the same scale.
Right. Banks are kind of a proxy for the whole domestic economy. Their performance often reflects general economic health, interest rate movements, things like that. So small dips there fit the overall picture of caution.
Okay, but here's where it gets interesting. Because not everyone lost ground. Some big names actually gained value.
That's right. It wasn't all red ink.
Bharti Airtel, the telecom company, had a really good week. Their value jumped by over 10,000 crore.
Yeah, 10,121 crore gain, bring them up to 1,044,682 crore. That's a strong performance against the trend.
What was driving that, do you think?
Well, the telecom sector has its own story going on. Things like the 5G rollout, increasing data usage. Connectivity is just essential now.
Sure.
So maybe investors see companies like Airtel as being in a strong growth phase, kind of insulated from some of the other worries. Could have been specific news too, but the general sector outlook seems positive.
Okay. And then there was Bajaj Finance. They do consumer loans, right?
Yes, a major non-banking financial company.
They also surged, up by, what, over 4,500 crore?
Yep, 4,548 crore gain, reaching 5,074,207 crore.
So despite general caution, investors still felt good about consumer lending, or at least about Bajaj Finance's prospects.
It could suggest confidence in their specific business model, maybe their risk management, or perhaps that certain parts of consumer spending are still holding up well. It shows that even in a down market, strong companies can attract buyers.
And ITC, the conglomerate, cigarettes, hotels, food.
They saw a smaller gain, up about 876 crore.
Maybe being diversified helped them. A bit of everything.
That's often the case. Diversification can act like a shock absorber. If one part of the business faces headwinds, other parts might be doing okay balancing things out.
And lastly, HDFC Bank. Huge bank, obviously. They eked out a small gain.
Just under 400 crore gain, reaching 14,080,723 crore.
Which, for a giant like them, maybe just signals stability, like a safe harbor in a storm.
Exactly. HDFC Bank often benefits from that perception. Strong fundamentals, big market share. Investors tend to see it as a relatively solid bet, even when things are uncertain.
So if we zoom out again, we had some big losers, some surprising winners. What were the main forces pushing the market down overall? It wasn't just company news, clearly.
No, the analysis points strongly towards wider factors. A big one was sentiment from global markets.
Ah, the global gloom.
Yeah, basically. Worries about economic slowdowns elsewhere, trade tensions maybe flaring up again, inflation concerns, central banks hiking interest rates. All that stuff makes global investors nervous.
And when global investors get nervous, they tend to pull back from riskier assets.
Often, yes. And emerging markets like India can sometimes be seen as riskier compared to, say, U.S. government bonds. That nervousness definitely spilled over here.
And that ties into foreign investment flows, right? The FIIs.
Precisely. Foreign institutional investors, the big overseas funds, they were net sellers last week. They pulled out 6,286 crore from Indian stocks.
Over 6,000 crore pulled out. That's significant.
It is. When that much foreign money flows out, it puts downward pressure on prices, especially the big, easily traded stocks that FIIs favor. Their decisions are often based on that big global picture.
Okay, so global worries, FII selling. What else? We mentioned profit-taking earlier.
Yes, that's definitely part of it. Markets had seen some decent gains before this dip. So it's natural for investors to say, okay, I've made some money, time to sell some shares and lock that profit in.
Especially with the big names like Reliance or TCS that had run up.
Exactly. It's a normal market behavior. A correction after a rally isn't necessarily a bad sign long term. It can be quite healthy, actually. Prevents things getting too overheated.
And then we had those specific sector issues, oil prices for energy, global tech spending for IT, maybe interest rate worries for banks.
Right. Those add another layer. Each sector has its own pressures, and those specific concerns feed into the overall market mood as well. It's a mix of global, domestic, and sector-specific things.
Now, can we clarify something? When we talk about these huge losses in market value, like the 40,000 crore for Reliance, that doesn't mean they actually lost that much cash from their bank account, does it?
That's a really important distinction.
Oh.
No, it doesn't. Market capitalization or market cap is just a calculation. It's a current share price multiplied by the total number of shares out there.
Okay.
So if the share price goes down because investors are less willing to pay the previous price, the market cap goes down. It reflects the market's perception of the company's value at that moment.
So it's like if you had a rare collectible, say a Pokemon card,
Right.
its value might fluctuate wildly depending on what collectors are willing to pay, right?
Hmm.
The card itself hasn't changed, but its market price, its perceived value has.
That's a perfect analogy. The company's underlying assets, its factories, its brands, they're still there.
Yeah.
But the market cap reflects what investors, collectively, think the whole company's worth right now, based on future expectations.
Got it. So a drop in market cap is a drop in perceived value driven by investor sentiment, not a direct cash outflow from the company itself.
Precisely. It's the stock market's current grade for that company, essentially.
Okay. So even with these dips, the ranking of the top companies, it didn't change dramatically at the very top, did it? Reliance is still number one.
Still number one, yes,
Yeah.
despite the big drop. Then you have HDFC Bank, then TCS Barbardi Airtel actually climbed up thanks to its gains.
Right.
Then comes ICICI Bank, SBI, Infosys, Bajaj Finance, Hindustan Unilever, and ITC, rounding out the top 10. It gives you a snapshot of the current corporate heavyweights.
And looking at these lists over time shows how dynamic things are. But this kind of volatility, this up and down, it's not exactly new, is it?
Oh, not at all.
Yeah.
If you look back just earlier this year, 2025, February and April saw some pretty big drops too. And back in May 2023, there was another significant dip affecting these top firms.
So these fluctuations happen. It's part of the market cycle.
Absolutely. And just to underline that point, the week before this recent slump, these same companies had actually seen their valuations increase quite nicely.
So it really does ebb and flow, keeps you on your toes.
That's the nature of markets. Rallies are often followed by pullbacks or periods where things just pause. It's driven by that whole complex mix of news, data, and just plain old investor psychology.
So looking forward then,
Yep.
what are the experts, the analysts watching now? What might signal where things go next?
Well, definitely keeping a close eye on those global trends. Any signs of stability or further trouble internationally will matter a lot.
Okay.
Foreign investor flows, the FII activity, remain crucial. If they start buying again consistently, that would be a positive sign.
Right, money coming back in.
Then there's the upcoming earnings season. Companies will report their actual financial results soon. Strong profits could definitely boost confidence.
Real numbers, not just sentiment.
Exactly. And of course, everyone watches the Reserve Bank of India. Where they decide on interest rates always has a big impact on market mood.
Okay, now, let's bring it back to you listening. Maybe you don't follow the Sensex daily. Maybe you don't own individual stocks. Why should this kind of market event matter to you?
It's a great question. Because these huge companies are such a massive part of the Indian economy. Their success or struggles affect so much.
Like jobs.
Absolutely jobs, but also the prices you pay for things, the overall economic growth that affects everyone. And even if you don't own shares directly, your pension fund or your mutual funds almost certainly invest in these big companies.
Ah, right. So your savings might be indirectly linked to their performance.
Very likely, yes. So these big market shifts reflect broader economic currents that do eventually touch our lives in various ways.
But it's also important to remember, as we saw with the historical data, that dips happen. The market goes down sometimes.
Exactly. And historically, over the long term, the Indian market has trended upwards despite these bumps along the road. Keeping that perspective is key. Avoid panic selling during downturns. Think long term.
Okay, so let's try and sum this up. Last week saw a pretty significant dip, erasing a lot of market value from some of India's biggest firms, especially Reliance.
Driven by a mix of global jitters, foreign investors selling, and some straightforward profit-taking after recent gains.
But importantly, not everyone went down. Companies like Bharti Airtel and Bajaj Finance showed real strength, gaining value against the tide.
And remember that market value loss isn't cash disappearing from the company, but rather investors reassessing what they think the company's stock is worth right now.
Right. So the big takeaway seems to be markets fluctuate. It's normal. This was driven by a combination of factors, both global and local. Staying informed is good, but maybe panicking isn't the best strategy.
Absolutely. Maintain that balanced view. And perhaps this leaves you with something to think about. How do these big economic shifts, these headlines about billions lost or gained, actually connect with your own financial world, your plans, and the wider story of India's economy? It's a connection worth pondering.